What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, is a glorious day. A wonderful day in the neighborhood. It's beautiful here in South Florida. The sun is shining. I've got the window open, looking at that ocean. Oh, man, glorious. Unfortunately, I can have no part in it today because it is a busy day for your boy. I've got Tiesto bumping today because I'm gonna have to get into the groove, guys. I know I was talking about it in the chat, but it's like, holy smokes, I have a lot to do today. Of course, we have this video, and then I've got to get the bull of the bear, or the bull of the bear, the bull of the day and the bear of the day. Those articles that we do for Zach's. Plus, I have the Momentum Trader, of course, and Home Run Investor, which is always a longer write-up. So I've got so much to do. And I did not, typically on Wednesday mornings, I get up and I get at them and I start getting it really early on. But that has not happened to me today because I've been so distracted with all of these fantastic little tidbits that are happening. And sometimes I get caught up in the trading, but that's okay because that's what I get paid to do, which is great. The other thing I've decided, some of these other off-kilter sort of, or not off-kilter, but these other topics that we have. So like the dollar shorts or the euro short, the yen short, and the oil short. I'm going to talk about these more in ZLT. I think what we're going to do is, and it's up to you guys, I think we're gonna start to move away from the, hey, we've got to find a trade every single one of these earnings reports, right? Because I feel like sometimes we're forcing them. Or maybe I should be more honest about that and upfront when I say, like, guys, don't trade this, right? But I don't want you guys to come away disappointed. When I do an earnings report, you sit for 45 minutes or half hour, whatever it is, and then at the end I'm like, yeah, I don't think there's a trade really. Maybe I should tell you up front or something. I feel like this with the chat room, with what we've been doing with the morning after, we've evolved it into kind of like a little trading crew. Right? It's like we find these opportunities, we go get it, and we're using options to do it. So it's a little different, but I still obviously lean on Zach's a lot to come up with stuff. So I think we're going to start doing, that's what we're going to kind of do. So here we're going to do some bonus coverage on this USO. Now, USO, and I know, guys, we're here for Deere, but we're going to, just a quick little caveat here. I hope everybody's okay with that, and if you're not, then just come back in like 5 minutes because I'm going to talk about USO for a little bit. By the way, I don't know if I told you guys, I got the SodaStream machine. Every diet thing is delicious. I got Diet Dr. Pete, which is like, Dr. Pepper. That was great. And then now I got the Diet Root Beer, and it's fantastic too. Anyway, okay. So USO pretty much tracks with oil. So oil futures, right? Here's oil. Here's USO. So if you notice, I have my oil chart marked up pretty good. Downward trend channel that we've had for a while, and I've seen oil kind of creep up here and stall out. So what I think is happening is a failure at the top of this trend channel. So that implies new lows. So we're talking under 42, okay? So keep that in mind, 42. Also keep this in mind, Wednesday, June 21st, and here we are about a month, not even a month later, right? Go back before that, end of May, beginning of May, mid-April. So about a month, right? I see basically you got a month. So USO, the lows, 865. So that's basically oil at 42, puts USO down at 865, right? So that's why when you guys were asking, what was I looking at this? We're looking for this to go down. So what I was, and if you look at the options chain for USO, it's cheap, guys. So I think Tej was talking, he wanted to buy he was looking at a $9 call, I think. Or I bought the $9 call. I think I bought a $9 call. Put, rather. I bought a $9 put. That's right. Stepping on this thing's neck. It only cost me 10 cents. It's out of the money. It was silly. But I had a buddy of mine buy the $10 put for 45 cents yesterday. It's at 55 cents today. And if that keeps on creeping down, it's going to be worth, a $10 put. If this gets down to $8.60, it's going to be worth $1.40, guys. Right? So that's free cheese as far as I'm concerned. So what's my thesis here? Why am I bearish on oil prices? Oil's coming down here. That means the dollar is stronger. Should this trend continue on the yen? Now I know we're getting into some stuff right here, right? We got some resistance to the upside. But should this yen trend continue and get to 114, that's dollar strength. This is in the positive direction. So that's two forms of dollar strength. Also why I was looking at the FXY puts, right? The dollar strengthens, the yen. So there's that. The other part about this was the euro. Now the euro is teetering awful close to this 117, right? Should the euro break 117? That's a nice little shelf, my friends. Draw your fibs, Suppose we can draw it from here. Probably get in the 114s, 113s. So again, short euro, which is, again, dollar strength. So I think we're going to have, and if you look at the dollar index, I don't know why it's so funky on this. Why is it so bad here? It's like this jump. This has been like this. Let's get a different. For some reason, it's broken here. There's a, what's the dollar? There's a US dollar ETF. Yeah. There's a dollar ETF. I can't remember what it is. Maybe it's it's not FXD, is it? Is there an FXD? Dollar. I know, I'm just going to stumble on this for a little bit, guys, and then I'm going to get, it's right, UUP. That was one of them. Anyway, we'll do that. Here's a bullish US dollar fund. I think we're starting to see appreciation in the US dollar. I think the US dollar has had a nasty, look at this dip, guys. It's a pretty long dip. I think it starts to creep back up a little bit. I think the dollar is going to creep. Yeah, there we go, UUP. I think the dollar is going to creep back up. I don't know how far it goes, but judging by what we saw in the euro and the yen, it's got a little bit, right? I'm just checking in on yields because this is what pops in my head. All right, so that's what I think happens. So that's a little aside. A couple of trades that we were looking at. A few people have indulged. I'm going to touch on it Friday morning because I'm going to go ahead and show you guys the UVXY put spread that I have on, that I put on last Friday. So we'll check in with that. Yes, of course, it's in the green. And then the FXY put spread, I think, that I have on, as well as USO. So we'll be able to check in on all three of those trades. All right. Now, Deere. Let's not get into the technicals yet, although that doesn't look terrible. Let's kick it off like we always do with the price consensus and EPS surprise chart here on Zax.com. Let's see what's going on here. Let's zoom in a little bit. And you'll see, all right, as always, black line corresponds with the right y-axis, which is price. The multicolored lines represent the evolution of our Zax consensus estimates and coordinate with the left y-axis. There it is, Abdul! Somebody hit the coach lotto. Wonderful. Wonderful, Abdul. I'm so happy that somebody hit the lotto. That's spectacular. All right, good. I was hoping somebody would tell me a good story, and you did. I'm very excited for you. Enjoy, my friend. Take a few of that. Take a little bit of that profit. I'm dead serious here. Take a little profit and donate it to charity. Whatever it is, it doesn't matter if it's $15 that you want to peel off. Donate $15 to charity, or $150 to charity. Peel off a little bit of it, donate it to charity. I know that sounds weird, but I knew a guy from back in the day who used to trade euros. He traded the euro exclusively, currency trader. He was a full-time currency trader, and that's what he would do. He would donate 10% of his profits to charity, and it just started like ballooning. And I don't know, man. It's just gonna fuel you. So take a little money, give back. That's my motto. All right. So yes, Paul. FXE was earlier today, but a couple days ago was FXY. All right. So let's get back to this. The multicolored lines represent or correspond to left y-axis, which is the EPS, okay? Red arrows, earnings misses. Green arrows are earnings beats. And you'll notice a healthy string of beats. Last time these guys missed was back in 2012. And then just beats. Solid beats. And the beats have been getting better. And the beats have been getting better as EPS has turned up dramatically. So when these people are out here screaming about how the market is overvalued and everything's going to hell in a handbasket, look at this. Here's EPS that was under $4 and now is over $6 for John Deere. Meanwhile, Deere stock went from under 90 to just under 130. So they've doubled EPS, but the stock has not doubled. Either way, nice trough, and now we're ticking higher. Okay, so lots of lofty expectations here for Deere. Let's look at the detailed estimates page. Zach's rank number 2 buy right now. They're going to report before the bell on Friday, right? So our Friday morning session, you betcha, could have a lot to do with John Deere. Top 9% of our Zach's industry rank, so they're not the only ones in that business that are doing well. Let's look at the revenue growth. 17% revenue growth for the current quarter. Next quarter looks like 17% also. Current year, 8.85. Next year is going to slow a little bit, so we do see some slowing. But what's the impact to EPS? This is a huge number. 25.94% EPS growth on John Deere. Next quarter, 51% EPS growth, okay? Right here, folks. Those are two monstrous numbers. And could be setting up something good for John Deere. Current year, 33%. Next year, 7 3/4. And the analysts have made moves just over the last week. 3 analysts have increased their EPS estimate for the current quarter, 2 for next quarter, 3 for the current year, and 2 for next year. But look at what the impact has been to the consensus here. How is this a 2? I'm still wondering why this is a 2. This honestly should be a 1. 90 days ago, we were looking for $1.55 out of the quarter. Now we're looking for $1.95. Next quarter went from 109, 136. The current year from 495 to 641. Next year from 561 to 690. And the surprises have been pretty substantial too. Last quarter, a 79-cent surprise. So these are some big numbers coming in here for John Deere. Okay, let's go to the G14 classified stuff and bust this out. I think we actually made money on John Deere last time we did this. They had an 8% move last quarter. The quarter before, pretty much nothing. Then you had an 11, a 14, a -5, -2. These guys have a tendency to move. And those were all on beats, but on the revenue side, little small revenue surprises have come. So I suppose we shouldn't expect too much from the revenue side, but the EPS side may be where the surprise lies. Let's see if we can go a little further back on these revenue estimates. We got 5 years. Let's see if we can go 10 years. More data is always better, right? So you do see a slowing in these revenues. 2014, 2015, and 2016. But we're looking for good stuff this month, right? This time. EPS. Nice solid growth after, again, 2015, 2016 struggling a little bit. Going to have solid growth here. So these are some pretty good numbers here for John Deere. Let's see how they've behaved relative to, I'm going to have to drop this down to get the index here, sub-industry. And 10 years, I'm a dinosaur. Just look at the last year to date so far, what's happened with regards to John Deere and the rest of the machinery market. They've outperformed, and a lot of that outperformance has happened since May. So since May, you have a nice little run-up. So basically, post-earnings drift from the previous quarter, raising the bar a little bit, looking to outperform. So there's some solid strength here. Now, got the nice gap up. Bermuda Triangle. I don't know why I drew a triangle. I'm experimenting with shapes today. Never got back into that gap. So that gap is well defended. I mean, forget about it. And then now we're at the 50-day. So a little retracement to the 50-day. Very healthy. I'd much rather see that than see them up at the highs, looking with not much else to go. So I actually appreciate this, because this can give us some fib levels. Post-gap fibs. Some people will do include the gap fib. I like the post-gap fib, though, myself. And we can see what's happened. It's come down 50-day, right around the 50% also. I like this to give us targets to the upside. So draw these fib extensions. Negative 38.2. That takes us to 137. And then I suppose support at the 61.8 brings you, I think you got to be more realistic that if this starts to break down, what's the swing low here? Swing low is 120. Maybe. Let's see what the options market has to say about all this. What do you say, options market? It's going to be one of those things. They're going to report the day that we're doing our morning after. Change this to the side-by-side view here. Where's my 127s? There's my 127s. Pull up the handy-dandy calculator. What do we got? At the money call, 285 by 291. Let's call that 288. The at the money put, 296 by 305. Let's just call it 3. 588 is what we're looking at. 4.6%. 588, 4.6. 588 and 4.6. So basically 133 to the upside, right? Oh, 580. 133 to 121. 133 to 121 and change. 33s. Oh, basically the highs. They're only pricing in the highs. All right, right off the bat, gents. When I see the options market only pricing in the highs, there could be some serious potential, because if it gets through those highs, forget about it. We are off to the races. Off to the races. But, of course, we are at the 50-day, which is a little bit of a concern to me, that we're at it. And the swing low. So basically the swing low is It's right around where they're pricing the bottom end of this. Okay. Back to my chain. Allow the post-earnings drift to take place. A little bit of a fake, but magical drift. Drift. I did a little switcheroo. Drift. So as these EPS estimates have gone up, there has been more drifting, for the most part. So we're looking for these trends to stay intact. Move from the side-by-side view to the stacked view on this September contract so we can construct couple of things. In the September contract, we're not going to have as much flexibility as we're going to have, in August, a week out, right? We've got all these strikes here. I think this September 8th expiration will have a little bit more, and it does. So I'm going to play around in this September 8th expiration, and the reason being it's the furthest out I can go to have, 127, 128, 129. Until next week, you're not going to have that fill out like that, right? So I want to have more choices and more flexibility here. So let's use this 127 call as an anchor. And essentially, he's pricing out here. You guys know I'm a fan of the halvesy. Maybe not enough meat on this bone down if we do the half. I want to price this first, okay? So what I mean by halvesy is if I'm doing a long call spread, what I'll do is I'll say, okay, the market's pricing in a move to here. But when you do the math on that, just the quick math, you see $6 here. Difference in the strike prices, 350 to 127, so that's about 230-ish, and then your upside is, so you'll more than double. Then if you drop that here, you got $3 difference in strike prices, and then 353 minus 218, so again you're going to be able to just about more than double. So rather than me just rambling that, why don't I put the calculator to use? So what I mean by this is if you went long, the 127 call is going to cost you 353. Now I'm going to show the further out example. By selling the 133, you're going to get back 127. So 226 is your net outlay. Difference in the strike prices is $6 minus that 226 is 374. So actually this is a little bit more attractive. Divided by 226, you can make 165% on that trade. On the flip side, going long the 127 for 353 and shorting the 130 for 218, 135 is going to be your net outlay. The difference in strike prices is $3 minus that 135 is 165, which you can make on 135 or 122%. So basically there's a 40% difference in return if you go out to the 133 versus just keeping it in the 130. So is it worth the extra risk up above and beyond 130 in order to get the extra 40%? Some people say yes. I'm going to say no. For me, it's not worth it. An extra 40% is not worth it. For some, maybe it is. But for me, it's not. Because we're already going to get a pretty good payoff here if this hits. So I'm going to say the bull debit is long the September 8th 127, 130 call spread for what was my number? 135? 135. For 135 net debit. So what you would need to max out on this trade is shares of John Deere to close at or above 130 at expiration. Okay? Now, I know what you guys are saying. I can already hear it because I'm saying it too. Well, Dave, if you're bullish on this, and you don't think that 130 is going to hold if they come out with a good report, then why are you reeling it in and just coming all the way down to this 130? And that's a very fair question. And a couple of things. One, there you go, Bill. Won't be off to the races in one day. Well, this is in one day. We went out to September 8th, so we did give it a few more days. Unless I messed up this options chain, I'll double check. But so there's that. And we can address this using a different trade. We can play that breakout differently, and we will. Okay. Yeah, it went out to September 8th on this. Okay, now on the bearish side. Still use the 127 because we're basically at, there we go, now we're below. So 127 is the anchor here. $127. And again, we're going to do the same thing with the halvesy. Good old halvesy. Going long, the 127 put's going to also cost you $353. Simultaneously going short the 124 put, you're going to get back $224. So your net outlay is $129. Difference in the strike prices is still $3 minus that $129 means your upside potential on this trade is $171 or 132%. Sounds pretty good. So I'm going to say that the bear debit is long the September 8th 127 130 call spread for a 129 net debit. Bulls and bears. Okay, guys? Now, yes, we're not in the monthly expiration. This is a week before the monthly expiration. What I want to do, though, really quickly, I want to just check in on the market because we got the Fed minutes. We got our Fed minutes out. And I just wanted to make sure that the world isn't collapsing. Did we just get a jump in the euro? The euro just run in my face. Following the minutes. They bought 117, didn't they? Oh my God, look at what I'm doing. I'm hacking everything apart, guys. Oh my God. Okay. So the bear debit, all I did was retype what I had before. Long, September 8th. Jeez, I mean, this is just incredible. 127, 124. Put spread for 129 net debit. Okay. Okay. Oh, so what's happening? So we're getting the opposite now. So I got dollar weakness on the Fed. Come on, Fed. What are you doing to me? Where's oil? Where's oil? Okay, we're good. Oil's still down. All right, back to John Deere. Now that I've got this madness figured out, me typing the wrong thing. I'm glad you guys catch it, though, because otherwise I would just be spouting nonsense 24 hours a day. Okay, so I'm bullish on John Deere, okay? I like the fact that the 50 days here and it's held. Now, I don't know a blowout and record of new highs. I'm afraid that John Deere does the Home Depot thing, where the first day we're in a hole and then we try to, and then we have to dig out of it the rest of the time. Okay, but I do think it will dig out of it. But I'm just concerned about that. These reports aren't done in vacuum, right? So when you get this Home Depot thing like this, I know it's not Home Depot and John Deere on two polar opposites of the earth, but it makes, this is what's in the back of my head during this earnings season, is that they've been using these high volume days to distribute some of these. stocks. Now, will that happen in John Deere? I don't know. But, so cautiously bullish on them. I do like the bull debit, though. 127, 130. I think even if you dip down intraday the first day, it comes back, and 130 is easy. It's really, you take out this really big down day, and that's kind of where we were. So I support at the 50-day. I like it. How expensive are these lotto tickets? I wouldn't even go that first day. Let's go out the 25th. At least the 25th, you got a little bit more time. Okay, so 9 days to expiration, of course, to give you a little bit more time. Now, already these 133s are 95 cents. Last time it had a what? There was a, let me pull up the previous big move it had. Let's look at the consolidated surprise. So it had an 8% move last quarter. So that puts you up to 137 if it were to duplicate that feat. So you'd have to chase them way up here, guys. I think they're too expensive. I think these lottos are too expensive also. That's the problem. When we get to these stocks that are $130, $200, $500, the lottos are expensive. You don't get the same bang for your buck like you do in a coach situation that we had. So if you want to, you got to get out. You got to get somewhere in these out of the money calls for a lotto situation, okay? But I think they're too expensive. I don't think they're shaping up properly, okay? Does that make sense, guys? And I know you're disappointed. See, that's why I was saying I'm trying to give you guys these trades, but I don't want to disappoint you guys. We get to the end and it's like, the lotto's really not going to work out here, right? But I know that's what a lot of you guys come here for. But these are just expensive. What can I say? I think these I don't think any of these make money. I think these all kind of putt out. That's why I think the 127, 130 call spread is really the way to go, but not obviously go out a couple more weeks. Okay? All right, that's what I got for Deere. I'd put this 3 stars on the risk scale. The real risk here is that the market pull just doesn't care what John Deere has to say and knocks it down. I think is the big risk. In terms of the trend, like the earnings trend looks pretty well developed and it does look good. And seeing these analysts increase their estimates is a very bullish sign for me. Danny, if you want to go with an out of the money call spread, let's look at Danny's out of the money call spread. You mean 9/8? I'm assuming he means 9/8, not 9/18. Yeah, I mean, you're basically banking on a breakout, right? A huge breakout. This is going to cost you 31 cents with your upside potential being $1.69, right? So, you can make 5 times your money on that trade. That's pretty darn good. 6 times your money almost, right? But you'd need John Deere to close over 137. But if you're bullish on it, it's not a bad way to lotto there, Danny. Not a bad way. Okay? All right, guys. That's all I got for you here with John Deere. I hope that this dollar strength is, or dollar weakness rather, today is temporary. Not looking too fabulous here right now. We got a little bit of dollar weakness, so I'll have to read the Fed and the Fed minutes, and we'll go from there. All right, guys? So thanks so much for hanging out with me here today on Dave's Daily Dive. Remember, tomorrow we're going to do Momo. I've got that in Home Run Investor, so I do have a little bit to say about that. And then we're also going to do the good, the bad, and the ugly trade review, which you'll get later on tomorrow. And then Friday, the morning after, 9 a.m., guys. I know most of you end up being there, so it's going to, let's go do it. All right? So thanks so much for hanging out with me here today on Zach's Live Trader. I will see you all in the chat room and later on tomorrow. Have a good one.